why are we going to? How are we going? Monetize. How are we going to monetize the why? So it doesn't really matter what the why is. It doesn't matter if the why is a trapped seller. It doesn't matter if the why is because there's a very strong book stack. We still have to ask the question, how are we going to monetize that? There has to be an ability for us to monetize that. And obviously what that then directs us to is the where and the when. And they kind of fill in at the same time. The where and the when cannot be separated, because we might have the when, but we don't have the where. So the when is obviously, where is obviously going to be based on what? Price, right? Where is going to be based on price, and when is going to be based on, of course, time, one would imagine, right? So we get that time price narrative when we start thinking about that. And then you go back to asking the question, well, now we've got the idea of where and when, we've now got an idea of all the answers. How are we going to monetize this? We're going to do this, and we're going to do this, and we're going to do this. It actually takes us full circle back to the why. You might say, what do you mean? Well, the how are we going to monetize the why is more of a structural question on the way up the pyramids. You understand? So this is a structural liquidity question that we start to build into this from the why. So when I know that there's a reason why we want to monetize something, why we want to do a bit of business, I've got great value for whatever reason, then I've got to think about how am I going to get the liquidity that's going to give me that trade? And I'm going to then direct that question, how, to the where and the when of time and price. And once I've got the where and when in terms of price, I have to go back to the how. Why do I have to go back to the how? How does it happen? How does it happen? You might say, well, is that a how? Well, how does it happen? How do we make a trade? How do we get to a point where we make a trade? So there's got to be a how again, hasn't there? How does it trigger? How does it trigger? What's my target? What's my stop? In other words, this is the execution how. And obviously, when we go back to the execution how question in the middle pillar, we always have to keep doubling back to the why to make sure that the question is still, there is still a reason why we want to do the trade. Do you understand? So we basically follow a loop round. So when you think about this as a particular loop, we can start recognizing this as such. We can start to recognize this little process here, where we go from this question how here to this question why here. And we can recognize that it goes round in a loop round those areas. Oopsies, I've gone and screwed that one up again. That happens all the time, doesn't it? And then when it comes back round the way, from here back down to here, it's the same thing, isn't it? It's exactly the same thing. We loop back round again. And then it loops round here, doesn't it? So we kind of can recognize, done it again, woo-woo, love it. I think I'll just throw arrows, I can't be bothered. So when we think about these as simple, basic processes, we start recognizing the cycle that we go round as we try and answer specific tradable questions. And what we've got to do as traders, what we've got to do as educators, is we've got to fill in each of these pillars with information. The pillar has to grow in terms of its size. As the pillar grows in terms of its size, then of course the ability for the pillar to hold a bigger and bigger weight at the top is getting better and better. The other thing that you've got to remember is if any one of these pillars is far too light in terms of its abilities, to hold the roof in place, then it could cause an internal structure to collapse, your trading plan to collapse. So we've got to build the pillars in such a way that you are building them in a uniform manner, so that when you build a pillar up and then you build another pillar up and then you build another pillar up, they are all about balanced. Because otherwise you get this lopsided, everything's dependent upon the order flow, or everything's dependent upon the why, but you're not using order flow properly, or anything's about the what and the how in terms of the structure area. Then we can see that that's going to cause imbalance in your trading. And if that imbalance results in a better trade, it's usually just because of luck. Because what we've got to try and do is we've got to keep these balanced at all times, to keep the roof level, to keep the performance level. And the idea is that our benchmarking pushes the roof higher and higher and higher. So our upside ceiling is always growing. But we can only grow the ceiling's height in terms of our trade performance, which is the height of the ceiling. We can only grow our trade performance by having a solid base, so that when we start out, we go through the first level, the second level, the third level, the fourth level, the fifth level, and we build it up in a process that keeps that ceiling rising, so that your upside ceiling, and you've probably heard this about, you probably hear this a lot in the draft. In fact, this is when you normally hear about it most. Kim will be aware of this. Anybody that follows sports will be aware of this in America. That when the kids come out of college, they might be brilliant, but they've maybe reached their ceiling. They might be far, far better than somebody else, but they've maybe reached their ceiling already, and therefore their upside is very limited. Whereas they might be a little bit less brilliant, they might be a little bit more raw, but their upside potential is enormous. So obviously it's about building a foundation for those kind of players that you can take a low pick in the draft because they don't really catch anybody's eye, but you can see that the upside ceiling on that player is huge. But you can also make a terrible mistake with those kind of players because they are not the finished article. Well, trading is very much like that. If trading is a finished article, the upside ceiling is going to be marginal. If at best, it's going to be small, right? That's what an arbitrage trade is all about. The ceiling is already fixed. It has a very, very obvious upside potential, hasn't it? Very obvious. But because it's so obvious, it doesn't offer a lot of opportunity. There is a very definite upside ceiling to that opportunity of maybe 1 or 2 ticks, because it is basically an arbitrage opportunity. So what we've got to try and do is start finding the best opportunities that haven't already reached their ceiling and still have that balance in place, so that when we execute against those types of trades, we're now at least able to see that there is a substantial upside ceiling available for us to execute into. And that's when we start building out these bases. This is why the base is so important, because the more base we build, the more upside ceiling we have the ability to tackle into. So when we see opportunities using each of these tools and we build out that opportunity, the why is not difficult to recognize. The why is not that hard to figure out, but sometimes it's too obvious and sometimes it's too easy. And that's obviously one of the things we try and balance up. You know, when we see value forming, we must have the ability to execute against that value. Oil's been a great example of it. You know, we had a brilliant short sale from last night. We even shouted out to everybody in the tweets last night. Did you see what price I said last night in the tweets? $78 oil. Did you see that, Paul? So last night's tweets, $78 oil. So we had a collapse in the value narrative, didn't we? We had a big collapse in the value narrative. We were able to look at that as a storyline. We're able to look at the underlying trade target price areas. And you can see that from 14 hours ago, that's exactly what I told everybody. Look, does everybody see that? Did everybody recognize that? Oil, the collapse in the VTOL model values puts oil at risk in the short term for declines to $78 wholesale. Well, when I took this screenshot, of course, you can see that oil was trading nowhere near $78 wholesale. When I look at that as a screenshot, you can see that oil at the time when I took that trade was trading actually around about $79.90, $79, nearly $80. Sorry, my mistake. The oil was trading about $78.80. So we're looking at about an $800 to $1,000 downside opportunity. So that's the why, right? I've now created the why for my oil trade. What I now have to try and do is I now have to try and figure out how I'm going to monetize that opportunity. So how am I likely to monetize a valuation of $78? How do I monetize that? I build a structure, or I follow a structure that allows higher highs to develop on oil. You agree? It allows me to think about a structure that develops higher highs on oil. It allows me to try and figure that out. When is that going to happen? When? How am I going to do the trade? When is it likely to happen? How am I going to get all that beautiful liquidity? How am I basically going to get the size on the trade? I'm going to manipulate prices. So when I look at that trade, I know when as well, because we know it's probably going to be 8 o'clock onwards. So when I look at oil today, we know that we've got a target price here of $78. So, I mean, we use up a lot of that target price in the overnight session. So we've got to kind of regain that target, haven't we? We've got to regain that value, that quality. So we know that 78.50 wholesale is going to be important to us. We know that prior swing highs are going to be important to us. Liquidity highs are going to be important to us. And as we come into the London session, you can see that that's exactly what we do. I don't want to start selling oil at 78.20 with a 20 cent downside. So the whole objective of the London session is to take it above 78.50. We're not likely to now achieve 79, are we? So the objective is really to get that overnight liquidity. That's the how are we going to monetize this? How are we going to actually make any money out of a 78.50 wholesale? Well, I've got to sell at 78.50 or higher. That's how I'm going to monetize it, correct? So if I'm going to monetize it, I'm now looking in these areas for that short sell to develop. And obviously looking around those areas, you can see that this almost becomes that perfect compass room short accumulation, doesn't it? And there it is. There's your business model right there. Do you agree that that's what our business model normally looks like? Do you agree that that storyline is almost exactly correct in terms of how we're going to achieve it? How are we going to monetize this? This is not where and when we're going to monetize this. You might go back to that and say we're going to monetize it because we're going to wait for the London Open and then we're going to take it higher. But that takes us to that point there. Where and when are we going to monetize this? Well, that's obviously that answer. It's going to be at the London Open, it's going to be at higher prices, but we've still got another piece of the jigsaw puzzle to figure out. How are we going to get triggered into this? And when we get triggered, or we're about to get triggered, we still have to keep checking the why to make sure the other pieces of this information fall into place. If we lose the why during that process of where and when, well, we have to go back to the drawing board at that stage and leave it alone. We have to say, well, it looked like a good trade at first, but I'm not so sure anymore. I think I'll just hold fire on this for the time being. So when we look at the how, when we look at how do we trigger, how do we execute, well, that's going to be a question for your trade tools. You know, what is it you're seeing on your trade tools that allows you to take a trigger? One of our best trade ideas is to look for a failed auction with a trap delta. We can probably all agree that the delta for this phase here looks pretty fair. The tick delta and the volume delta look as if they're pretty much the same line. So it's very difficult to execute a trade strategy on this one, isn't it? Very difficult. One might argue that perhaps this 2 sigma candle here might have given us an opportunity to maybe sell into that trade there, but I think you'd be clutching a little bit at that trade as a narrative. The book starts to sell off. The book is still selling off. And then we see a trade that looks a little bit like this here. Book's very stacked on the bid. Book is now stacked on the offer. Tick delta is now completely flat. Volume delta is now running sweeps. I now have absorptions into that trade. I now have an opportunity to execute into my trade plan right there. And it's the exact price that I want to execute. That is the how do I trigger that trade? And I should have a series of tools that allows me to trigger that trade. And if the tool is an absorption lean, that's the tools. That's my business plan. The delta is quite clearly trapped. You can see that from the tick delta. The book is quite clearly stacked. You can see that from the stack coming in the limit order book. You might be saying, but would that not have generated a sell trade over here? Well, it might have generated a sell trade over there, but what's the problem with taking a sell trade here? You can see that the volume delta is very punchy. The book seems to be stacked on the offer. So what's the problem with taking that as a sell trade on your business plan? What's the problem? And we should have 100% answers on this. 100% correct answers on this trade. What's the problem with that sell? And there's a lot of problems with that sell, a lot of problems. Is the sell coming off a swing high? Has the sell got any sellers below it? In other words, has been there any divergence on the tick? Any divergence at all on the tick delta? So that attention to detail is the how, isn't it? That's the how does it trigger? And it's not just about the 56. It's just about the fact that there is nothing on that candle that would generate a sell trade. Nothing. Except for the book stack maybe starting to come in on your favor. But to sell that is, to me, very, very risky. And unless you're a commercial, that is not a trade you should be trying to take on your books. When we see this very heavy delta coming in here and we very barely take out the top edge, I think that's a far better sell coming in now at that stage. And a Heisman trade there perhaps would be acceptable to me. But if you're obviously needing as part of your trade plan to make sure there's sellers at lower prices, that is now finally achieved at that stage. Because that's now finally achieved, you're now in the world of selling this. You're now moving towards that execution trigger because your trade plan now has the components that you've put into that final pillar. And the final pillar this time is the yellow pillar at the bottom edge, not on the way up. The final pillar is the how does it trigger execution trigger element. And the how does it trigger has to be clearly defined by you in advance. What kind of trigger are you willing to use? Do you need to see sellers at lower prices? If you don't, how are you going to enter that trade? If you don't know in advance these questions, the answers to these questions, if you don't know this in advance, guys, you should not be trading live at this stage because you're making it up on the right-hand edge. That's always going to be a recipe for disaster because you're making stuff up. In other words, you're driven by your attitudes at that particular time, your feelings at that particular time. You're driven completely by your emotional state. And that's a bad place to be as a trader. because you're now trading on emotion, which puts you into fear and greed, gambling mentalities. So if the trade doesn't set up, guess what you do? If it doesn't set up against your trigger execution, guess what you do? Nothing. You leave it alone, and you are happy to leave it alone because it didn't fit into your plan. Now, you might want to go back and revisit your plan, but until you've had an opportunity to go back and revisit your plan based on a trade that you should have maybe had, but you didn't get because your plan is maybe not clear enough, you need to revisit your plan, and this needs to be written down. I'm not talking about a trade log. I'm talking about an actual structure, strategy, narrative. So when you go through the full cycle, by the time we get back to this here, everything else should be right. The liquidity should be right. The price and the time should be right. We know that that's very dependent upon that volume story being completed. And then as soon as we've got that, we need to know how we're going to execute it. For some people who don't have order flow, for example, it might simply be a candle reversal. But what size of candle reversal? Be very specific. Is it one tick below the previous candle? What if the previous candle is a spinner candle? Does that count? You don't want to be making these ideas, these thoughts up on the right-hand edge. You need to be clear before the trade takes place. What is your trigger for execution? And if you haven't practiced that trigger, if you haven't demoed that trigger, and therefore you don't know whether that trigger is any good and whether it makes you feel right about the trade or not, you probably shouldn't be using it on a live account until you do know that it makes you feel good, that the trigger is the right trigger to be on. So when we loop this round, when we loop this entire process, we fill these pillars up with knowledge. And as we fill the pillars up with knowledge, we find ourselves getting more opportunities to make trades, not just the occasional 56 that sets up. We find ourselves ability to perhaps even fade Frightener candles. We find ourselves with the ability to fade into a Heisman top line. We might find ourselves the ability to sell for a BSG squeeze or a tipping price trade, even though a 56 never existed in the background. In other words, the knowledge base opens up more opportunities and extends our ceiling north. It lifts our ceiling to a level that we make a lot more money during our trading. Every time we build an extra layer to the pillars, the ceiling lifts. Our upside lifts. And that's what we've got to try and do, is build these in balance, build this pillar structure in balance. And as we build the pillar structure in balance, opportunities open up for us. The more opportunities, the better able we are of being able to make some seriously good cash on the trades. Have a think about it. And that's what we'll be building out in the next rest of this week, perhaps.